So before I start this session, let me just say that because we are diving into history, we all have different political ideologies. So let us not focus on the political ideologies, but rather go with the facts and accept what has happened, and rather not think that if a different government was there or might have been there, the scenario would have been different. So I'll start by sharing my presentation. So from 1951 to 80s, we had many crises. I usually talk about crisis so that we understand the value that we have right now and the challenges that we have overcome and the growth we can see actually. So you can see that in India in 1950s after the partition, we had food crisis. We were not having proper supply chains, not having proper storage facilities and all. In 62, we had war with China. You all might not, we don't know about the war that much, but we have heard or read in the textbooks. We had war with China, we had war with Pakistan in 65, and immediately the next year we had drought situation. So India faced a very difficult situation in the first 2 decades. Then came the Indira Gandhi in the 1970s, wherein before that Nehru Gandhi died and Indira Gandhi was our prime minister of India, having the socialist ideology that Nehru followed. She implemented MRTP Act, that is monopolies, market restriction, trade policies. So that the government or the companies do not have monopolies in their situation, and the local, what you can say, the consumers are supported and well behaved. So in this manner, what happened to India was that earlier, before the British Raj, we had our GDP contribution to the world was 23% of GDP contribution. It came down to only 3% because of the British rule and the socialist behavior and what we faced. Because in 1970s the MRTP Act was there, we were shut down from the world. We were not part of the trade practices. The companies were not allowed. If you might have seen the movie Guru, you can see Abhishek Bachchan telling that we are not allowed to sell beyond, we need permissions. There was license Raj and everything was that. What happened in that? That in 73 and 74, we had a fiscal deficit that widened to 3%. During that time, the oil prices increased by 300%. That is, from it increased from $3 to $12, resulting in a 22% inflation on annual basis. So now if we move from 70s, we had socialist government. When we come to 80s, we had his son who was the prime minister, who was appointed the prime minister in 80s because Indira Gandhi was shot down because of the incident that took place in the Gurudwara. So when you look at this map that I have made of the Sensex historical data, this whole data is collected from BSE. So if you see, we started our balance of payments problem, that is our current account deficit problem. We didn't had FDIs during that time. We didn't had that much FIIs, and we started problem during 1985. Uh, to reduce all that, Rajiv Gandhi was known as a technocrat. He brought Maruti and all. But similarly, by opening the ironically, what uh, should have happened didn't happen, and we still faced more fiscal deficit, resulting in 1990 was resulting more problems over the period. In 1990s, we had the PV Narasimha Rao government, wherein the Dr. Manmohan Singh was our finance minister at that time, and he made a wonderful reform. We got our independence in 1947. We got our economic independence in 1991, where the Manmohan Singh said that we will liberalize, we'll reduce import duties, we'll allow FDIs, we'll allow FIIs, we'll allow the domestic institutional investors as well as the retail investors to invest in the market, and the license Raj was demolished, and all that was happening. Even though we had liberalization, our situation at that time was so bad that the government had to pledge the gold that was confiscated from the Maharajas or the Rajas, and that was pledged to fuel our imports. In 1992, we had Harshad Mehta scam. So, preceding in the just next year, when we had our economic liberalization, we had Harshad Mehta scam. So, what changed overall in the 90s when we talk about Harshad Mehta scam? So, what happened is the Soviet bloc, which was there, that we what we call as Russia right now, collapsed. Uh, the collapse caused an impact that we used to trade in rupees, and now we had to trade in dollars. The government was on the verge of default, so it pledged the gold. Our economy opened in 1991. Harshad Mehta scam happened in 92. We had a widening gap of manufacturing and an industry. So industry doesn't belong just to the manufacturing, but rather there are more components that construction was taking up and allied activities were taking up. So what happened? Uh, the government, ironically, if you look at the 1991 liberalization, it was done so that we bring in new technology. More manufacturing should happen even here, but rather there was no service charge, so service sector economy skyrocketed. And if you can see, the gap is in the industry and in the manufacturing has declined over the years, and that is the irony that we are facing right now. The government is saying that we should be focusing on manufacturing. What used to happen earlier was we used to do technology transfers. We used to bring any company, we used to sign technology transfer, and for 30 to 40 years we used to carry that same technology with us and manufacture for just India and not outside the world. So when you look at this economic policy instrument, you will understand that the whole method, or when you understand that the economic policy instrument, you will understand that the whole government which focused on socialist, rather focused on export-led industrialization. They removed the controls and regulation. The market was driven by technology. The technology started growing up as I grew up. I remember I was born in 1995, and the technology has gradually improved. And right now we have 5G. So technology has grown over the years, and it started. The internet was new thing. So service sector started growing more, software exports started growing more. We had more outward looking trade policies that the government was supporting more of exports. There was removal of FDIs. Earlier, the FDIs were not allowed. If you might have read the news or anything, you might remember the incident where Coca-Cola was once here before the 1991, and they had to pack up and go back because of the policies. Now they are back here again after the 91 reforms, and the things are moving smoothly. So the tax structure and everything that was there simplified even more. Right now it is even more simplified than what we saw in 90s, in the whole 90s era. In 92, we had Harshad Mehta scam. So what happened? in what was the result of Harshad Mehta scam. So if you look at household savings, अगर मैं household savings की बात करूँ तो household savings are simple कि हम लोग कितना save करते हैं अपना total income में से of the whole consumer side, उसमें से कितना पब्लिक प्रोविडेंट फंड में जाता है, कितना सेविंग्स अकाउंट में जाता है, कितना शेयर्स डिबेंचर्स में जाता है, कितना कैश में रखते हैं, वो सब कुछ होता है. So if you look at the line that I have underlined, if you see it here, we had a total household savings in 80s to 86. It represented 7.1% of the GDP. Then in 1991, it was 11%. Till 96, it was 17.9%. And then the whole backbone of getting into shares and debentures and buying all was cut down because the retail investors as well as the institutional investors suffered losses. You can see it here that it was only 4.9% of our total household savings. Now, if you look at the household saving rates, you will understand that 50s it was 0.3%, 0.4, 0.6. In 90s, it was 1.3% of the total GDP contribution. Then it came to 0.3. Right now, it is increasing. It is again 1%. It is moving to 2%. And we are increasingly investing in shares. This is excluding the mutual funds and life insurance pension funds and the other funds that we are invested in. But this is only the shares and debentures of the company. Right now, you might see that we have a boom, but Harshad Mehta broke the backbone of the shares and debentures industry at that point of time. And if you look at from 92 till 2002, it was almost the Sensex was almost flat. So it was at 92, it was 2615, and in 2002, it was 3377. So it has not moved that drastically as it moved after 2002 and what it is now. So what happened after the 90s? So as I told that it moved into till 2002, it was relatively flat. Then we had a boom period where IT sector was growing overall in the world, not just in India. Uh, then we had 2008 financial crisis. Most of us remember it as a Lehman Brothers crisis. What happened? We were not impacted by the Lehman Brothers crisis because our economy was not that much open as it is now. But rather, we were impacted by the oil prices, which touched $140 per barrel. And it broke our economy again. But in the next year, our Sensex increased from 9647 to 17. It doubled almost. Reason being that whenever US enters into recession, the oil prices decline. So you can see that in 2008, the per barrel dollar price of oil was $140. Now in 2009, it was $41. So the difference that we have because of the recession of US gives us a direct or an indirect benefit that we can purchase the crude oil in that sufficient manner, and the current account deposits or the deficit that we have can be shortened. So this was the thing that happened. Then again in 2013, we were faced with another crisis that we call that as an economic crisis, where the policy initiatives that were taken by the Manmohan Singh government was known as anti-growth. And what happened during that time was currency depreciated from 53 rupees to 62 rupees in a span of 6 months only. You can see the current account deficit also growing at widened at 5% in 2013 in this particular graph. While you can see that what happened because the currency moved from 53 to 62. What was the reason? The reason behind that was the US federal government announced that it was tapering the stimulus which was offered to banks. So in 2008 financial crisis, the banks were offered a stimulus package so that they can grow, they can grow their assets and become stable. It was then taken back in 2013. The DIIs or the domestic institutional investors thought that we might face another Lehman crisis or 2008 financial crisis situation. So you can see the outflow that started in 2013. It was major till 2014. And then again, after 2015-16, we were back to normal. So it was because of the panic that we faced and our currency depreciated. Then we had a new government in 2014. I can say a full-fledged government because there was no coalition government during that time from since 2014. So what changed our economy or what made India resilient was that in 2013-14, Raghuram Rajan improved the NPA criteria. So earlier, what used to happen that banks used to roll over the loans and were not showcasing NPAs. So the people in the industry told that you need to change the criteria. Raghuram Rajan changed that, and banks started declaring NPAs. So banks are clean. In 2013, when we had economic crisis, Nandan Nilekani's brainchild was formed. That was Aadhaar was formed. After 2014, government announced Jan Dhan accounts where you can have 0 rupees even in the deposits and savings account, and you can still have a bank account. The financialization of the economy started. The government came up with new startup policy, new incentives, new subsidies for the startups that were starting now. More FDIs started inflow, more FPI started. We were faced with demonetization in 2016, which cleared the parallel economy. What majorly people say in 2017 we had GST implementation. Suddenly after that, so the previous taxes that were a bit complicated were now smoothened out. And in 2019 we had COVID, which was not basically our fault, but one of the major thing that I have highlighted at the last is pension fund can invest in equities. In 2015, the government allowed that the pension fund investments, which the government employees or the employees used to have, were allowed to invest into equities because the government bonds or corporate bonds were not enough for the inflation, considering inflation to the whole family after retirement. So they were allowed to invest in equities in which the pension fund grew uh, and skyrocketed like anything. If you can see the composition of household savings in financial and physical assets here right now, you can understand that out of total 100%, how the economy has evolved. You see that earlier in 50s till 70s, the financial products were not that much utilized, and majorly investments were made in physical assets such as real estate and gold and silver, and even the bonds and all were not utilized in 80s. From 80s, that was from the time Sensex started, major people started diverting their assets not just in physical but rather also in financial assets, and now we have the same ratio maintained in the this graph. If you look at it, you will understand that our mutual funds from 1819 before COVID, In 1920, it decreased. So this is all the net financial assets, or what I can say is the household savings that retail investors and domestic institutional investors invested this amount, this much crores in mutual funds. Right now, it is back on track. We are showing resilience right now. Similar fashion, you can see that new age retail investors are coming up. So people started the new age retail investors, which I say started in 2019 during the COVID when there was a dip of 25% where the Sensex crashed. And since then, the direct flows of retail investors have started growing into equities. So currently, what I see in future and why India is showing resilience is because there are few things that are happening simultaneously all over India. The first is there is a China plus one strategy. That is, the companies or the MNCs are figuring out that we cannot rely solely on China, but rather we need to have strategic locations such as Vietnam, Bangladesh, China, Europe, and other countries, so that we can do manufacturing in that. So right now you might have seen that Tata is making semiconductors and is growing into defense. Vedanta is getting into chip manufacturing. We have new policies that is coming into API manufacturing. That is, Himachal Pradesh announced that they will allow uh, similar to GIDC, and they have allowed SEZ in Himachal Pradesh. Chemical manufacturing is growing right now because of the Paris climate change. They are reducing their emissions, and the zero COVID policy that they are following. Right now, the countries want to shift it to India because it is the only cheapest solution possible. We are growing into electronics manufacturing. Currently, it is at $80 billion. By next 2 to 3 years, it is expected that we might have a $200 billion of industry of just electronic manufacturing. Why? The reason being we have a 5G rollout, and the government is still planning at 6G over the next 8 years. We have something called ONDC, that is Open Network for Digital Commerce, wherein it is a total, it is reducing the monopolies of companies such as Amazon and Flipkart. We have Open Network that is coming up, that is for the lending similar to ONDC. You can ask me on a detailed explanation in the question answer session regarding this, that India Stack is bringing Open, it is bringing ONDC. We currently launched CBDC, that is the central bank digital currency that we launched in 1st November. The concept paper came on 2nd October and we launched immediately in the 1st November 2020. So we are moving faster than the world. Then, as you can see, the Tata deal that is happening, we are also focusing on defense exports and the new age industries. That is the what I say is that the climate change investment companies like Adani Green, Reliance, and all are focusing on renewable sectors. So this is where there is growth. This is where EV is coming out, ONDC is coming out, lending is growing. Currently, if I look at show you some numbers, we are having resilience because our inflation is currently very low. If you look at our bond rates of the 10-year bond yields, it is somewhere around 7%, wherein our inflation currently is around 7%. So we are not having that much problem. We are also, if you look at the scenario of US and Europe, they have very low interest rates and the inflation is high. So they are having more problems than India. And this is the first time I have seen in the history of India that our Reserve Bank is being a laggard and is scaling back and saying that whatever US is doing, we need not do the same price hike or rate hike, interest rate hike, and we are comfortable with our position right now. Many people say that the GDP numbers or we are achieving growth, but we do not understand how the growth is there and how it is happening. So in 2008, EPFO started sharing its monthly data. You can access it from the MCA government website. So in the last 4 years, we added 3.5 crore employees on informal sector. If you talk about informal sector, the data is not available. So for that data to be collected, the government has launched eShram portal. And if you look at the Sensex historical returns, if you had stayed invested from 80s till now, you would have attained a 14% CAGR returns. But rather, if you remained for a decade only, in from 1980s, you would have attained 23.85, then 22, then 14.7, and right now it is somewhere around 11% over the last 8 to 9 years. Reason being, there was crony capitalism that was going on. The books were not that clean. The frauds were happening, scams were happening, and the promoters were not that clean. Since 2014, all things have started cleaning up, and we have started. The actual numbers are coming up, and the returns that we are getting is based on the government directives and the RBI that has gone strict and the SEBI that has gone strict that you cannot do certain things or the companies cannot do certain things and have to report certain products. So that is why we have gotten a few 11% CAGR returns over the last decade. If I talk about the current scenario over the last 1 year that we are facing with war, we have supply chain crisis, we have inflation going on. I already explained regarding the inflation. If we look at supply chain crisis, currently we are actually adjusted to the supply chain problem. You might remember that when Bajaj Chetak came new, people had to wait 1 year to buy Bajaj Chetak. When telephone came new, people had to list their numbers and had to say that we want all this telephone, and the waiting time was almost 6 months. You go to buy a car right now because our population is so much. Demand is already there. The only problem that we are facing is the supply side. So we are adjusted to that. You can wait for 6 months or 7 months to buy a car. If you go and have the same thing in US, they need a car in 1 or 2 days or max a week. They have not seen this waiting period. So they are facing more crisis than what we have. We are doing much better than the Western world or the developed economies, which I can say. If you look at Sensex and Nifty in compared on a relative basis, we have grown flat or moved sideways. That we have grown. If you look at today's data, over the past 1 year, we have increased 4%. Rather, the Sensex has moved 4%, but US Dow Jones, Nasdaq, and all has moved negatively by minus 18%, minus 25%, minus 10%, and we are showing resilience. So all the emerging countries which are going to be benefited from the China plus one strategy or the financialization that is taking place are being benefited over the last 1 year. So if you still stay invested, it would be a better time that you might earn good returns over the next 6 to 7 years. So